was the last straw. I thought, man, I am digging myself a grave here. And I couldn't see myself scaling to, let's say, 50 properties or 100 properties.
All right, welcome everyone to the Millionaire Enlisted Podcast. Today we have Travis. He is the Director of Investor Relations for Ashcroft Capital. If you don't know Joe Fairless, best ever, that is his and other several managing partners, their company. So we have someone here who's connected with that company with a lot of experience. Travis, if you go ahead and start us off, just tell us a little bit about yourself, who you are, and your background.
Sure. Yeah. Well, thanks for having me. First of all, happy to be here. So I got started in real estate in 2009, and I got started probably the way most people get started in real estate, which was just buying a single family house, and didn't really have a lot of plans. So I started house hacking, renting spare bedrooms. I ended up converting that first unit I bought to, that was like my first buy and hold rental. And then I got more into fix and flips. I got into vacation rentals after that. And what ended up happening is, on the side of doing all of this, my full-time focus was a W-2 employee. And I worked in the oil industry. And I worked 98-hour work weeks, and I worked away from home, and I worked overseas. And I guess what I'm trying to say is that I created myself a second job unintentionally, right? And so the real estate started pulling way too much of my time away from my work. And so that's where I discovered kind of go back to the drawing board, start self-educating again. And I learned about syndication investing, right? Where you could actually be a passive investor, you could actually be hands off, and you could still take part in real estate. You could still, have cash flow. You could still have equity appreciation. It's just, it doesn't take up your time commitment. So that's kind of been my focus since around 2015. I sold all my single family homes and I went 100% passive. And, that's brought what I refer to as time freedom into my life.
So let me ask you this. Are you currently, so you say 100% passive, you don't own anything active right now?
Correct. Yep.
Okay. Wow. And as far as, your balanced work life, you said it's gotten much better.
Yeah, I think that's kind of, to me anyway, that's the purpose of being a passive investor, is being able to have that type of balance. Everybody's kind of seeking different things out there. I work closely with, busy professionals, W-2, engineers, CEOs, VPs, business owners, athletes, people who have a primary focus and they don't want to take time away from that. They might be a doctor or a dentist, whatever it is. They're not going to give that up to go pursue, fix and flips, for example, but they love the idea of investing in real estate. They want to be in it and not maybe 100% in the stock market. And so this is a great outlet for that. And so it can allow you to go, part-time with a job or quit a career. Like in my case, I didn't enjoy, to pursue work that was meaningful to me, that I could kind of self-develop from.
Awesome. So what are the benefits of passively investing for you, as opposed to, other than the time, right? The time commitment that you just mentioned, what other benefits are you seeing that have made you that transition?
I think the thing to think about is, what do you really want to get out of real estate? I mean, so this is where I was very scatterbrained when I got started. I just, if you would say, what's your long-term goal, or what's your, I'd just say, I don't know, make money. I don't know, and that was a big mistake, because what I was actually wanting was full passive income, right? I didn't necessarily want to be in the business of managing tenants and working up leases and getting on the phone with attorneys to make sure everything, is legally structured and all these kinds of things. That was a side effect of investing the way that I was investing. And as I got into vacation rentals, that was the very last thing I did in the single family space. That was the last straw. I thought, man, I am digging myself a grave here. And I couldn't see myself scaling to, let's say, 50 properties or 100 properties in the single family space, given that I had a W-2 job that I needed to focus on, that I had to pay attention to. That was kind of first and foremost in my life. And so, yeah, the biggest thing is it's different for everybody. Could there be more money, being active? Of course. If you want to get out there, get your hands dirty, spend your time on it, be a syndicator or a general partner or a fix and flipper, of course there could be a lot more money in that. But you got to remember that you're paying yourself for your time. And so if your focus is elsewhere, passive investing might make a lot of sense for you.
I hear you. So how many units are you invested in right now passively?
Oh, over 6,000, I'm sure. But
Wow.
I'm in about 30 different deals as a limited partner. Most of those deals are syndications. Some of them aren't, units per se. So it's not like multifamily. It might be first lien notes or distressed debt or ATM machines, or so it's hard to pinpoint an exact door number. But yeah, typically what it is let's say there's a 300 unit apartment building. I might be a 2% owner of it. So I guess you got to kind of divide the doors up that way. 2% of 300. Yeah.
So let me ask you this: when you started doing syndications, right, and you started being a passive investor, what is some of the doubts or fears that you had to overcome in order for you to put your money into somebody else's investment?
Yeah, great question. So I was very skeptical. I'll just level with you. I was. The people that were like telling me that this was a real thing and that the returns could be A, B, C, or D, I'm sitting there thinking, no, because I'm doing my own deals. I'm putting in all the legwork, and here's my results for that. And you're telling me I could basically get the same results or close to it and not do a thing? I was so skeptical. So it took me a long time to kind of overcome that fear. I didn't know the industry. I didn't know the key players. I really hadn't educated myself enough. I had just educated enough to kind of be dangerous with it, right? To just throw some money at it. But I guess to my credit, I just did one syndication first, and I just did the minimum investment. And I sat back and I watched that for about 6 months to make sure it was actually going to be what they said it was going to be before I really threw myself into it and realized it is a real thing.
Okay.
So had you heard of, had you not been exposed to these type of investments in the past before? Is that why you were so hesitant? Because I know most people aren't, right? I mean, this is
Right.
you either have to be accredited, and if you're not, you barely hear about it because you can't advertise to a non-accredited person, right?
Yeah, there's a lot of SEC rules surrounding this industry, and the majority of folks that are doing syndications are operating under a 506B offering, B as in boy, which to your point means no general solicitation. I can't say here's the deal and here's the returns and here's what it is. You can do that under certain regulations, but most people aren't using those regulations. So my education to that point of transition was primarily through books and just a little bit of research online, but I was self-educating, but like in the wrong areas. And so what I had to end up doing is start joining meetup groups and real estate groups and listening to more podcasts, more current relevant things. And more importantly, I had to define what it was I wanted, which was to be passive. And so that's where that key word right there, passive, that's where it started really popping up. Prior to that, I couldn't have even defined that for you, that I wanted to be passive. I just wanted to make money,
Make money
in real estate.
Don't we all, right?
Yeah. So of course you get all the catchy headlines when you just want to make money in real estate, right? It's all the HGTV fix and flip shows, stuff like that.
Yeah.
I hear you.
Yeah, that's why I was asking, because you hear all the make money easy, the easy way, and it's pretty hard to trust somebody and actually believe all the expectations that they put out there for returns on investment. So that was a pretty good answer.
Yeah, you're at the end of the day, syndications are an investment in a team. It's a people business. It's a team business. So what are you really betting on? You're betting on the people doing the deal and their ability and their track record to execute on the business plan, to do what they say they're going to do. It's the hierarchy is really vet the team out, vet the market out second, vet the deal out last. And that's the complete opposite of how I started. Started just looking at the deals going, wow, that's a good deal, I'll do it. And that was the wrong approach.
That's a great segue there. I was going to ask you is how should a limited partner vet a syndicator? You know, what are the key things that someone should do?
Yeah. Well, being that, as I just said, it's, in my opinion, it's the most important aspect. It starts with, to me, defining what it is you really want. Are you more interested in, let's say, a new development type of deal where they're going to build something from scratch? It's going to be a class A, new luxury, high-end type of product in a particular market that you like, whatever. Or that you like value add, which is what I like, which is fixing things up. It's buying something pre-existing like a 1980s or a 1990s built property and renovating it so that the rents can come up to the market levels, and then selling it, you know, sometimes refinancing it. It depends on the business plan, but I'm a cash flow investor, right? I mean, my whole story has evolved to be just focused around passive income. That's what allowed me to leave the job I didn't like and pursue the work I wanted to pursue, and just to have less stress and anxiety in life and things like that. So it's so I know that didn't exactly answer your question. So how do you vet, you know, a sponsor? Starts with just conversations like this. I always recommend a face-to-face if possible, but I completely understand it may not be possible if you're, you know, California based and they're in New York City. It's not like you're going to buy a plane ticket just to go shake their hand, but do a web call or something, you know, or at least just get on the phone in general. Ask all your questions, ask about the what ifs, ask about recessions, ask about the debt structure, ask why they're doing this and not doing that. I mean, ask your questions. And you got to feel comfortable with the general partnership, because you're going to be in some of these deals for 5 years, 7 years, 10 years. They're illiquid for a certain period of time. So if you're not comfortable with that person, or you think they're shady, or you just don't get a good gut feeling, you don't commit. Don't lock yourself into 5 years. It's a relationship like any other type. You know, think about, you know, dating someone or whatever. You got to do your due diligence to a point, right?
Yeah. Have you had a red flag pop up from someone trying to get you to invest?
Well, definitely out there in the industry, there's a lot of newer groups out there that I just, it's okay if you're new, but have somebody on your team that's maybe a mentor, or that can look over your shoulder, or bring somebody in as like a GP that can, you know, help you out and leverage their experience and expertise. Because I get sent deals weekly, you know, lots of deals weekly. And a lot of them I just get the impression that this person maybe just read a book last weekend and now they're raising capital, or they came out of a 2-day boot camp and now they're going to try to tie down $20 million. And that stuff is scary. You know, if you don't have any kind of track record and all you have is enthusiasm, it's a scary, you know, mixture. So in hindsight, there were more red flags. As I look back with some of the first deals I did, it was like, oh man, I should have seen that coming. But
that's funny. That's funny.
Yeah.
No, I agree with you. That's one of the things we're at least looking at is some higher level mentorship just to take us to the next level.
Yep.
That's great advice right there. German, what you got?
Yeah, and I'm curious because you seem like a pretty stress-free type of guy, right? You want the passive investors, and you want your time for yourself. But and it sounds for the people that are getting into knowing about syndications, it sounds, for a lot of people, it sounds too good to be true, right? I mean, it was for you at the beginning where you're like, okay, it can't be that I get my hands dirty and you offer me this deal that I don't have to do anything. I'm getting the same returns. So, and I know it's not stress-free, but what are some of the stressors as an investor, right? You're called to this investment, and you're going through the due diligence, and you're kind of like, okay, I want to put my money to this. What are some of the stressors that passive investors go through compared to active investors?
Sure. I think specific to syndications, one of the biggest things is lack of control. So I'm the kind of person who has done enough now self-reflection to realize that, I'm nobody special in the real estate space individually. In other words, if I go flip a home, there's probably 1,000 people that could do it better than me. So I'm the kind of person I'd rather leverage the expertise of someone who is the expert and just say, hey, you do the flip and I'll share in the profit. And so I know that for so many people out there, it's hard to relinquish that control to say, here's $50,000, take it, I'm going to wire it to you, and I trust you for the next 5 years to make the best decisions on my behalf. And that's probably the number one thing that hurdle to get over, if you can get over it. On top of that is just the illiquid aspect of this type of investing. It's not the stock market. It's not you buy it today and then tomorrow you go, oops, never mind, I want my money back. You don't get your money back until the deal is done or it's refinanced. And like I said earlier, that could be years. So you need to know, again, your goals, your time horizon. Are you comfortable with that? These types of things may not be appropriate for some types of people. Let's say you're, 85 years old. Maybe syndication's not the best thing for you, not having access to your money for the rest of your life potentially. So you got to weigh all that stuff out. For me, I've got a very long time horizon, and I'm very comfortable with it. On top of that, I get anxiety from the stock market, man. I've had my fair share of the ups and the downs, and it's, every time I log in and it's down 20%, it's, I'm having a heart attack, and, so that's personal to me, right? Some people don't have that problem. I certainly do. So it's pros and cons. It's just one way to invest.
I hear you. As far as benefits for a limited partner, because I know there's a lot of tax benefits, cost segregation, you name it. I mean, there's a lot with a syndication. How does that work? Does it pass it down to a limited partner, to a passive investor?
Depends on the deal. So different groups have different structures, but in general, all of the deals that I personally have taken part in, it has flow through tax benefits. And more importantly, when I was doing all these single family homes, I'm having to track all this stuff, like all these expenses and these receipts. And I'm having to Google, can I depreciate my roof I just had replaced? Or how about the paint? Or it's a lot of work. It's a lot of time. What's great about a syndication, to the benefit side, is that you get a K-1 tax form one time the following year and all the work's done for you. So whether you do your own taxes and you just scan that in or put it into TurboTax or whatever, or you give it to your CPA, it's already done for you. Those are the numbers. And so what you'll see, just using rough numbers, again, it depends on the deal and the group and all this, but when you do cost segregation and bonus depreciation, all the tax benefits that are out there now available to real estate investors, there potentially can be a lot more tax benefits to larger properties. And so what I see in my experience is, let's say, again, rough numbers, nothing exact, no specific sponsor, but if I made $10,000 in passive income through distributions that came to me, I might get a tax form that says negative $30,000, meaning that on paper, using depreciation and all these paper losses, right, I more than offset the income I received. So I'm not paying any tax on that. And then I have carryover that I can move towards, future years as well. So yes, it can be tremendous for tax purposes.
That is awesome. You're building some true generational wealth right there.
Yeah, absolutely. People, it's a huge expense that so many people don't even pay attention to, right? It's like taking 30% to 50% of your wealth over a lifetime and giving away in taxes. That's pretty substantial. And for most people, that's more than their rent or their mortgage. So something to think about and plan for.
I hear you. German, you got something?
Oh, no, not right now. Actually, I was thinking about a question and I just flew out of my mind. Go ahead.
So as far as Ashcroft Capital, where you work at currently, correct?
Mm-hmm. Yeah.
What are some of the minimum requirements for an investor to come in for them?
Yeah, Ashcroft Capital is a group that they're a syndication firm, New York City based. They do a lot of deals out in Texas and Florida, and they're in the multifamily value add space. They're mostly doing B-class properties, 1980s, 1990s built, things like that. I've been an investor with them as a limited partner for about 4 years. I'm in 9 of their deals currently. And the thing that I like about them is just their business model really resonated with me and with my wife. We sat down before I even knew Joe Fairless or Ashcroft. We sat down and put our criteria on paper, things that were important to us that we wanted out of a potential deal. They basically checked every single box. And so, again, I started with one deal, saw how it went, then two, then three, then four, worked my way up. To your point, their requirements they're accredited only. So it's high net worth, high income individuals, $1 million plus net worth, excluding residents, 200 to 300,000 income, depending on single or married, for the last couple of years. So just a great firm out there, in my opinion, in the space doing this kind of stuff. But, for anyone non-accredited, they wouldn't be an option. But at the end of the day, this whole passive investing thing is just really a mindset of what could passive income do for you in your lifestyle, and how could that free up your time or allow you to leave the job you don't like or go part-time or launch your business or whatever. You could start with, publicly traded stuff, real estate, REITs, real estate investment trusts. People, if they're really committed to this idea, you start for $10 just buying a share of whatever out there that's high dividend yield. Anyway, so I came to Ashcroft as part of their investor relations team because I just fully support what they do. I understand their business model. And so what I was doing leading up to the pandemic is going to conferences. And so you'd see me behind like an Ashcroft Capital booth, just answering people's questions about who is Ashcroft, what do you guys do? Maybe I was a speaker, a panelist at a conference or something like that.
So I'm curious, just to follow on that relationship, the shift, right? How did you go from being an investor, a passive investor, where you're just putting your money in there and you want to go on vacation, to now being so passionate to work with them? How did that turn there?
Yeah. So what happened was the oil field job was a high paying job that I had, and that helped me get the process going, right? And so that allowed me to have some disposable income to throw into real estate in the first place. But the fact was, I hated that job. And that job, as I'm sure everybody knows, I mean, the oil, look at oil today, right? I mean, the oil industry is boom and bust. So it wasn't like I was going to have this 50-year career, even if I wanted it. So I had to, the end date was coming, right? And so I was prepping for that all along. And so the passive income allowed me to move towards work that was more meaningful and impactful to me, things that I personally would benefit from out of self-education. First thing I did is I went to go work for a brokerage firm. So I wanted to learn stocks, bonds, mutual funds, and how they differed from real estate. And, I guess I thought I'd be a financial guru if I could learn all that stuff. That was my plan, I guess. And so I didn't like it, long story short. So again, I had the passive income kind of backstop to say, hey, you don't like it, go do something else. So I went to go work for syndication firms after that to learn underwriting and acquisitions. And so that's what led me to Ashcroft, is that I thought, what better thing could I be doing with my time right now than helping educate people, number one, about passive income and this type of investing, and number two, a group that I'm already an investor with that I fully support. And so that's how it came to be. And it's kind of funny story. I reached out to Joe Fairless initially with this idea, and he's like, no, we don't really have anything right now that we could offer you, And I was like so depressed because I'm like, I had nothing else going on. I was like, I don't know what I'm going to do, And then it was like several months later, he's like, well, now we have an investor relations position. I was like, boom. And man, I jumped on it 5 minutes later. So
that's awesome, man. Yeah.
It's a pretty cool story. Yeah.
Yeah. It's cool that they, a lot of these guys are actually really open to talk to you one-on-one and even mentor you. I mean, it's awesome that you could just do Instagram or whatever. And, hey, Joe, do you have a position? I would work for you. I'll cut my salary in half,
Right. Yeah. And that's the benefit that unfortunately a lot of folks will never have without passive income is that backstop of, hey, you could work for half your salary. You could work for no salary. You could volunteer for someone and just be, a mentee of theirs, whatever. And that can lead to some tremendous opportunities. But, for most, it's more of a paycheck to paycheck play, and that's not going to be reality. So It's a great thing to have, even if it's part-time, passive investor. Just have a little bit of, second source income if you can.
I hear you. So
Absolutely.
what advice would you give to people looking to passively invest? What one advice would you say, hey, you need to do this, or
what one piece of advice?
Yeah.
Oh man, that one's
What's
tough.
your key advice? Yeah.
I think, okay, I'm a huge advocate for just self-education, right? So in any form. So become a learning machine, read a book, listen to podcasts, get on YouTube and understand passive investing and syndications, network with people, go to conferences. I'm not saying you have to do all that stuff, but just my mind didn't really start opening to all of this until I had so much information that I could finally see the huge benefits that this really has from every angle. To your point earlier, the tax benefits, the time freedom benefits, right? Leaving, your job, retiring early. Like when you start adding all this stuff up, it's like, it's kind of a no-brainer, but it starts with education, right? If you've never heard of passive investing or cash flow or real estate, and someone just says this to you, it's going to be like, that's a scam, like it's not going to, it just doesn't work. So you got to start with education to get more open-minded, to take part, to get the benefit.
Absolutely. I love that, man. Thanks so much for that. German, you have anything? One last question? Or
No. It's just the education part. I'm really good at in education, but it's educating yourself in these type of topics. Things that are gonna skyrocket your income and your lifestyle. So I really like that answer.
Yeah, absolutely, 100%.
Travis, so where can people find you? How can they reach you if they want to talk to you about passive investing, whether it's Ashcroft or not? Go ahead. Can you tell us?
Email is usually the best. So my email is travis@ashcroftcapital.com. I also have, by the way, I didn't even mention this earlier, I've got a free passive investor resource guide for any of your listeners. So basically the topics that we talked about on the show: how to vet an operator, how to vet a market, how to vet a deal, terminology, benefits, pros, cons, active versus passive. So you can get that at ashcroftcapital.com/passive investor. And I'm also out there on Facebook, LinkedIn, Instagram. So feel free and reach out. I have conversations all week long with people and all elements of real estate. I just love networking, and you always take away one or two things from everybody you speak to. So don't hesitate to reach out, even if you're not accredited or something like that.
I love that, man. Everyone has a different perspective, and I tell my brother that all the time. Every person we talk to, we get like one little nugget. We're like, oh wow, this is great. So thank you so much, man, for coming on, and for those of you that are listening, don't forget to subscribe and leave us a review. Thank you so much.
Thank you, Travis, and for
Travis,
for the perspective from a passive investor, which is very important right now.
You bet. Thank you, guys. I really appreciate it.
Thanks, man.